Hi guys, thank you for stopping by. It's been quite a while since I've created a video, and my apologies for that. Just to kind of give you a little life update. So I've been really working on my physical and mental health during this time, as well as just kind of trying to catch up with taxes for all my clients. Now that tax season is not officially over because we have clients with extensions. For the most part, things have slowed down, so I'm very thankful for that. I wanted to start making a little bit more videos, and if you know me, you probably already know that I focus a lot of my time talking about taxes and bookkeeping and QuickBooks for my private practice clients, specifically my therapist clients. And what I want to do is shift a little bit in the way that I offer services to better serve my clients. This is a hole that I see. This topic is something that I feel like nobody's really catering to, and it's just kind of an afterthought, which is S Corp elections. So that's really what I'm going to start focusing on is not necessarily providing that service, although we do provide that service, but educating you about what to expect if you decide to do this on your own, or if you hire a different accountant. Then I want you to be able to have all the information that you need in order to make educated decisions for your private practice, and you're not just kind of going along with what somebody tells you is the right thing to do. Let me back up in case you don't know me and you're new here. My name is Jeanette Andrada, and I focus on helping therapists with S Corp elections and just being confident about their taxes and their tax situation for their private practice. I know that many of you are aware of what S Corps are. Some of you might be completely new to S Corps, which is perfectly fine. Again, my videos are here to educate you. So make sure to subscribe in order for you to get the latest videos from me. But in this video, I did want to go into what we need to look into before making an S Corp election. And let's first talk about what an S Corp is. An S Corp is a tax status. So a lot of people get confused. It's not like an LLC where you register for the state. This is a tax status that you elect with the IRS, and essentially you're saying, I want to be taxed as an S corporation instead of a sole proprietor. So that's what an S Corp is. S Corps really save you money in multiple ways. Let's get into the things that you should probably know and take into consideration when making an S Corp election. The first thing is to ask yourself, are you earning enough money? Remember, you're going to pay yourself a salary, and that's going to be a requirement. It's part of your compliance for owning an S corporation or being a shareholder, what's called a shareholder of your corporation. So you want to make sure that you have enough money to justify that. If you don't, then it's probably not a great idea. I see this happen a lot where my clients or prospective clients, they go somewhere and they're told just make an S corp election, and not really fully understanding that, hey, this is a part-time private practice, or there are a lot of expenses that go into starting up. You might be investing in coaching programs, or you might be investing in professional services, or you might open up your own office or hire contractors. So all of this is taking income away from you, and you still have to pay yourself that salary. So if you aren't earning enough and you have all these other expenses, then don't make that S corp election, because what I see happen all the time is that these therapists will make that S corp election, and there's just not enough money to go around, essentially, and they'll end up not paying themselves a salary, which again the IRS requires that from you. So that's something that I wouldn't recommend doing. The next thing that you want to consider is if you are willing and able to invest in administrative tasks and compliance. When you own an S corporation, the accurate bookkeeping is very essential because you have to file your tax returns at the end of the year, and they're different from your individual tax returns. Your corporation will have its own, and they're typically due around March 15th because you need accurate bookkeeping and accurate records. So that requirement adds a layer of complexity with your financial administration. So you're going to want to ensure that your financial records are just thoroughly maintained throughout the year. Don't wait until the end of the year to do this. And you're going to want to make sure that you're accurately reporting your income, your expenses, and not just income and expenses that you're used to if you're a sole proprietor, but you also want to report your salary as a business owner and what we call distributions. You have to make sure that you're accounting for all those distributions correctly in order to have accurate financials. If you are not ready or able to invest in these types of tasks, then it's probably not a great idea right now. You obviously could still make that S Corp election, but just know that you're probably not gonna be completely in compliance. And this does require a higher level of bookkeeping and understanding. So just keep that in mind. And side note, if you decide to hire a bookkeeper, you want to make sure that you are asking them if they are experienced with S corporation, specifically the balance sheet. You don't have to know exactly what that is, but just know that it is a report, a financial report that is used for your tax returns. So I often find a lot of bookkeepers are not experienced with the balance sheet, which is very important for S corporations since the balance sheet is typically reported on the S corp tax returns. Next thing you should take into consideration before making this S Corp election is if you're in this for the long haul. Making an S Corp election is a significant decision and it has long-term implications. What I've seen, and I see this quite a bit, maybe like I don't know, 5%, 10%. It doesn't sound like that much, but it is more than you would think. Again, making that S Corp election and realizing like, I can't pay myself the salary. This is too much compliance. This is too expensive to run. So they end up either revoking their S Corp status or wanting to revoke it, which is why they come and see me. And I always advise, like, you could revoke that status, but just keep in mind that once you revoke that status, you cannot make that election again for 5 years. So if things are really slow at the beginning, but you know they're going to pick up in like 3-4 years, then revoking the S Corp election means that when you do get to a place where you are in a good position for an S Corp election, that means you're not going to be able to do so unless you just kind of start a new business. So that's just a whole other complex situation that's going to be confusing for you, for your insurance companies, for just for everybody. Again, don't make that S Corp election if you know that you're not really going to be earning enough income at the beginning, or if you're going to have a lot of expenses to where you can't pay yourself a reasonable compensation and you're just not benefiting from the S corporation status at all. I know this was a lot that we went through. What questions do you have? Make sure to put them down in the comments and I will do my best to make sure to make a video for you explaining everything. Also, visit my Instagram page because I do put some content up there. Make sure to subscribe to this channel. It really lets me know that it helps and that what I'm talking about is important and matters to you. So make sure to subscribe, like, and comment. Thank you so much for sticking around and I will talk to you next time.